case study prior to all the news that popped up with Fair.com recently, so it was rather interesting to see. We had certain assumptions of what that profitability or lack thereof was, and then all of a sudden those news articles popped up, so we had to throw those in last minute. Now we're going to switch gears a little bit, and we're going to switch to inventory. Obviously, as an LHPH or Buy Here, Pay Here dealership, you're creating a stream of payments, right? That's basically what you are. You're a collections company, you're creating a stream of payments, but the foundation fundamentally is the car that that customer is driving that's making payments to you. So the car is a huge issue and something that everyone pays close attention to, whether that's what type of vehicle, where they get that vehicle, what vehicles they like, what vehicles they don't like, and so that's what we're going to talk about now. So I think we have a couple of folks that are new on the panel now, so let's start with some introductions, and if you would, Stan, go ahead and start us off.
I'm Stan Summerall, been in the business since 1987, finance, franchise stores, independent stores, and so on and so forth, and a few different positions in the industry, including a director with credit acceptance for 6 years. And we started with LHPH in January of this year and have about 600 active accounts. Is that close enough?
Yeah. There you go.
Is that better? Anybody hear anything I said? All right.
Joe Seagrave, got in the car business 2005, been LHPH since 2010, 3 locations in North Carolina, 2,800 accounts, somewhere in there. Do offer a warranty on all of our, or include a warranty on all our vehicles for the life of the lease. I think for this segment that.
Sure.
I have 6 kids. I'm from Utah.
How many wives? Currently one.
All right, what's really nice about this panel is that we have kind of a range in terms of business models as well as the vehicles that they tend to run, which I think is nice because not every dealership is the same. Different markets require different focuses and different ACVs, different terms. And so what I would like to do now is if you guys wouldn't mind, could you talk about what your average deal looks like in terms of what your average vehicle looks like?
So about 40% of our sales are recycled inventory, and that's typically a pretty low ACV car, $4,000 or $5,000 ACV car. On our fresh purchases, it's typically about a $8,000 to $9,000, and about 70% is a 4-door midsize car.
Do you want structure of the lease as well? Or?
Sure. Well, just anything that kind of gives us a little background as to why.
Yeah, we have a range. I mean, I'll do anything down to a 1,000 ACV car if it'll run a note. But our typical ACV is going to be in the sweet spot is that $4,500 to $7,500 vehicle, running a 36-month note, and anything else in particular.
That's good.
I'm kind of in the same place that Nick is as far as new purchases because we don't have as many recycles, yet because we haven't been, we haven't made that 3-year turn with the lease here, pay here and stuff. But most of our stuff is going to average in that $8,300 to $8,600 a range, price range. 17-year model, kind of an average in that 50,000 range, because we want a car that's obviously here. I'll pull it up here a little closer. It's ultimately needs to run the note, but most of our inventory, I can tell you, out of 400 plus cars on the ground, that we're probably about 80% of our inventory is $12,995 retail with $1,500 down. 36-month leases, anything above $13,000, we go 42 months. We've made a few mistakes in this beginning, obviously stretching those terms, but we've changed that now.
Gus?
So we recycle about, 35% of what we sell is recycled repossessions. And those ACVs on those recycled on that 35% of our sales is probably about $3,500 average. On the fresh purchases that we're buying out and putting into the portfolio, average cost on those is about $6,500. So overall, our average is somewhere around $55,000 to $6,000 range.
And then in terms of...
That doesn't include reconditioning, that's just straight cost.
And that was actually what I was going to ask next. What do each one of you average on your recon?
1,800.
1,200.
Up to about 1,200 now.
I'm running significantly less than that, because we're buying a lot of, Hertz off lease, Avis, dollar rent-a-car, all those type stuff, so we're running really under 800, including transport and all in recon.
So for the vehicles that you guys purchase, what kind of characteristics or traits are you looking for as a good LHPH deal or a good BHPH car?
I personally think the best lease vehicle you can buy is a mid-size car. And I don't think it really matters what, as long as it's not Euro. And the only exception to that might be the Volkswagen Passat. And the newer, the better. Our customers like it more. You're going to spend less money reconditioning, all that stuff. Whatever there is a lot of at a particular moment in time is what you ought to buy, because they just drop in value. Dealers, and I think this is a dealer thing, not necessarily a consumer thing. Dealers get this perception that when they start seeing a ton of Altimas, that you better not buy Altimas, there's too many of them. They soften up. 2 months later, they're gone, and the value goes up. I can name example after example after example of this, where the rental car companies dump one kind of car, they become extremely low in MMR. Nobody's buying them. They're begging people to sell them. They sell out of them finally, and 60 days later, you see them run for $1,500 more. I could make a whole list of scenarios like that. So that's my strategy, and I'll give you an example of that. Volkswagen. I go down to Vegas all the time to buy cars, and football fields of Passats for years. I watched these cars. And then they finally started unloading them 2 years ago. These were 2013s with 30 or 40,000 miles for $7,500, $7,000. And they were selling like 80, 90 of them at a time, and I bought like half of them, 40 or 50 of them. We put them out on lease. We're getting them back. Take a wild guess as to what MMR is on a Volkswagen Passat SE 2013 with a sunroof and leather right now. What do you think MMR is? The same. So find whatever there's a lot of and buy them.
I agree with Nick. It's just whatever we can get a better deal on. But I mean, obviously, there's some vehicles that you really want to try to get. Like we really like the Impalas because they just run really well. Right now we're staying away from all the cruises because it's taking too long to get them fixed. When they come to the shop, we're having issues with them, and parts are on hold with the manufacturer. So we just kind of stay away from those. We're having a big issue with the Fiestas too. So we have a bunch of them on the books, and they're coming back, and they're still covered by the manufacturer for transmission issues. But now you got a customer that's on your books that can't wait a month to get that thing fixed, and you're going to get a voluntary surrender. So we've stayed away from those as well. The Sonics with those turbos, we stay away from those. So I think there's some cars that you have on your do not buy list, and then everything else is kind of fair game.
Yeah, while we're talking about cars with mechanical, there's turbos are bad news, but they're everywhere, that you can't avoid them. And so you kind of figure out what the failure is, or your shop guys do, and figure out if there's a fix that doesn't require them sitting at a Ford dealer or a Chevy dealer for a month and a half. And there's just some cars that you just can't, like TDIs. I really like TDIs, 40 miles to the gallon, 10-year warranty from Volkswagen. How can you go wrong on something like that? Well, the problem is the check engine light comes on, you take it to a Volkswagen dealer, it's sitting in their parking lot for a month. And that immediately is a terrible asset because our customers aren't going to put up with that. They're going to voluntarily surrender it. And then trying to get that car on the lot and ready for sale is just a nightmare. You got $8,000 sitting in a car that you can't do anything with. So definitely be looking out for things like that. That being said, I'm going to go with my original statement: 4-door mid-size sedan, and it doesn't. Fusion, Sonata, Optima. Altimas have transmission problems, but Nissan, you can buy a totally reman, brand new transmission for $1,800. That makes it worthwhile on that. 3.6 Pentastar motors from Chrysler are going to start sounding like diesels at around 100,000 miles. My mechanics have found a fix for that. It's lengthy, but you cannot avoid a third seat SUV that's newer that you can buy for like $8,000. You can't ignore that car. So we fix them, you know.
We avoid anything that I wouldn't want to see back in 2 years. So I don't put any, ultimately in this business, we make our money on recycling assets. Because of that, I don't put anything on any Europeans on the street, anything that I don't want to see back in 2 years to recycle. I think a big thing in inventory acquisition that needs to be considered is the structure of the financing that you have available. If your structure is with LHPH, you're probably at about, now granted this is based on our payment structure that we have in, is at a $75 a week average payment. The most that we can finance with LHPH is about an $8,500 ACV car after down payment. ACV, recon, all in after down payment. That $8,500 car is still gonna only generate a spread of about $10 a unit. And so where I really want to be is a $100 spread per unit. And so that makes me much more likely, if I'm averaging $1,500 down on a vehicle, I can get there in that $6,500 all-in car. I'm putting $5,000 on the street with LHPH, and it maintains a $100 spread. So the bottom line is with inventory acquisitions, that sure, there are GDI engines, Jeeps with CVTs. I mean, the list goes on. And you have to be careful that you don't get burned by one car and then all of a sudden you get to where you're not buying any car on the market. If we could all have a lot full of Toyota Camrys and 4Runners and Highlanders, we probably would, but oftentimes those vehicles aren't out there. So I think you have to be careful of that, make sure your structure is working, and make sure it is coordinated with how your financing is set up such that you're putting the car that's infinitely sustainable on the books so that you're not selling yourself broke.
That's it in a nutshell. I'll kind of expand on that a little bit further and stuff, as some of us were talking about it earlier, is I think when it boils down to inventory, you obviously always want to avoid the ones that you see in the shop. You're always running into those CVT transmission, all that type of stuff that you're burning money on. But the biggest piece of that puzzle, I think it boils down to each individual of your store's structure and cash, you know, in the bank of what you can actually put on the street. You know, we've been doing the same structure I just told you and stuff, and we started at the end of January, and we're 798,000. There you go. Hold my arm up. 798,000 of our own cash in the street, in addition to LHPH on those deals. Now we've seen that. You know, we know the structure. We knew where we're at. You know, coming along the way, but that has to do with the price point of the car too. Because obviously, if you don't have that kind of cash in the bank, but you still want to produce a lot of contracts of revenue, you got to be buying a cheaper car. But you just got to be more careful if you're buying that cheaper car. You know, you've got to stay in. I can tell you majority of my inventory, probably 90% of my inventory is four-door sedans. You know, it's the Fortes, the Optimas, the Corollas. Corollas, I'll overpay for a Corolla every time because it'll run a note. You don't have to worry about it. Camry, same way.
I would say that with the four-door sedans, that's a little bit of a product of the environment that we have been dealt since the recession. And you went for a period of about 5 years there where gas was $4 or $5 a gallon, and they didn't put any new vehicles, or new SUVs, pickup trucks, Suburbans, Tahoes. They weren't putting those across the curb. So if we're on an average of a 10-year-old vehicle, that's the least available vehicle out there on the market. Well, what sold 10 years ago were your Fusions, Impalas, four-door sedans. And so we'll find ourselves, I would guess, as right now Ford quit making sedans, and we're going through that. 10 years from now, we'll all be sitting in the room saying, really like those small SUVs. And because that's what's going across the curb right now. So again, I would encourage you to focus on vehicles that fit within the deal structure that you have available to you based on your capital partner. In addition to that, vehicles that are easily recyclable and that your customer can maintain outside of the warranty. If it's I know you like, Nick and I often banter back and forth on stuff. So he likes the European stuff, likes Passats.
I do not like the European stuff.
Okay.
Except for Passats.
Except for Passats. And in
And
full-
my demo.
And in
And
full
my demo.
disclosure, on a Kevin Lauderhome static pool, we looked at the most profitable car that we have put in service since inception was a Volkswagen Passat. And I won't touch them at auction. So there's an exception to every rule. There's a car, that I can tell you parts of a Camry that go bad. I can tell you parts of a Honda Odyssey that go bad. Eventually, what Nick said holds true, that get ahead of that, know what the problem is, avoid, like GDI engines. Don't buy a GDI engine. They go bad at 120,000 miles. They all go bad. You can't get them used. They cost a fortune, so avoid them.
So just to speak on the GDI, that's a Hyundai, that's Hyundai Kia. We had an 09 Sonata, and we took it to the Hyundai dealer, and we got a new engine under warranty. So,
Yeah, they have a new thing right
yeah. Yeah.
They can't give them away at auction.
now. Yeah.
Well, that's another thing. So Nissan Sentras, it's not a question of if, when that tranny's gonna go out. So 2013 Elantra, Corolla, whatever, 80,000 miles is a $5,500 to $6,500 car at the auction. Sentras are $3,000, and you can buy a brand new reman warranty transmission from Nissan for $1,800. And the motors never die, and the vehicles hold up really well, other than their stupid transmissions. I mean, so there's a case to be made for stuff like that, and I bought a ton of them last week, and so.
So it sounds like, do you guys allow customer preference at all to be a driver in the inventory that you select, or are you gonna pick that car and you're gonna get them into it?
The interior of all the cars we've been talking about is way nicer than the interior of the buses that are running around town. So, I mean, that's basically what we're competing against. No offense. I mean, and these customers are trading in cars that go straight to the junkyard. So we look at these rental rockets as just a commodity and nothing special. Most of our customers really like these products.
Well, I'll speak to that, is we view it, and I even train it with all of our people and stuff, is the want is what got the customer bad credit. We're selling a need. The product just goes with the contract, but we're selling a need for financing, a need for transportation. I don't care what color it is, or weight, shape, size, brand, doesn't matter, fit the model and sell it. It's that simple.
Question in the back?
Yeah, is the price point competitive? Do any of you have hybrids in your inventory?
Love hybrids. Excellent vehicles.
You mean hybrid powertrains?
Yes.
Yeah, some of them are really bad, really, really bad. But like Toyota Prius, you can't go wrong with that. The batteries